What's going on? What's going on, everybody? It's your boy Deonte Burden, aka Mr. Short Dollar himself. Happy Wednesday, everyone. Listen, I want to do a quick live feed to discuss something that I went through a couple times over the past couple years, and it's something that I have to deal with all the time, being a self-employed entrepreneur. And a lot of people that go down the road of self-employment, even if they have actual a job or anchor already, but the issue comes up a lot of times, especially if you file any kind of Schedule C with your tax return, is knowing the things you need to know when purchasing a home when you have self-employed income. Again, what I want to discuss in regards to, make sure you know this. It's some stuff I want to discuss with you that I think everyone need to make sure they know when buying a home when they're self-employed. Again, I'm Deonte Burden, aka Mr. Short Dollar himself. Right now, we're streaming live on Facebook, YouTube, Instagram, LinkedIn, TikTok, and Twitter. The main hub is the Mr. Short Dollar YouTube channel, where we have over 700 videos on the YouTube channel covering everything from business, from entrepreneurship, investing, financing. We have a grants playlist with over 150 grant opportunities. I don't know why I'm going damn blank right now. But I did want to have this quick, I'm in between meetings, but I did want to have a quick live feed with you guys to discuss this particular topic. Again, we're talking about things you need to make sure you know of if you're self-employed and you're looking to buy a home. Now, we all know, guys, pretty much when you actually get to that point, you want to purchase a home, or if you already had a home, you want to do any kind of refinance. If you originally did have any kind of business income or you were reporting the taxes on that income, now you've actually decided to purchase a home or refinance it. You have to be aware of something that's very, very important when it comes and bites a lot of people in the butt, because a lot of times people come when you hear normal people file taxes, you see all the information that'll tell people traditionally. If you get a business, you can write all these things off. You can write these particular business losses off that may reduce your taxable income, i.e., you may not have to owe the IRS, or you may get a bigger refund. The dangerous part about that, when you report those losses, when the time comes, and you want to purchase a car, you want to purchase a home, and you submit your tax return, you guys can see that's my dog Snow walking in the background. I want you to think I got a big rat man walking around, that my baby girl walking around. But what a lot of people don't make you aware of, is when you're writing all those massive business losses and getting this big refund, it'll come back and bite you in the butt when you want to do a home purchase or a refinance. And the reason being is because the information from that tax return is taken. In addition, if you already have job income and looked upon it and looked at with the lender saying like, look, this is reducing the actual amount of money that you were making with your job, or if you actually have a successful business that you're writing all these losses off that you've made up, is lowering the chances that you can get an opportunity to purchase this home. So I want to have a discussion with you guys tonight, because there are a lot of information that are telling people, get your business, you can write off this, you can write off that. But that's true. But the downside of it, it can impact you far more worse than that damn $3, $4, $5,000, whatever tax refund that you're getting. Okay. So again, I want to have a discussion, talk about some things that you need to make sure you know, that if you're self-employed and you're buying a home, okay, and again, this information can be applicable if you also already have a home and you want to do a refinance. Okay, so we know basically, when you look at credit, when you're getting a loan, typically lenders look at from a personal a personal loan. We're just talking about a basic individual. Let me move this mic a little closer. A basic individual that is looking to get a home loan. What they typically look at is just what your credit is, your actual income and your credit score, right? Your income and your credit score. That number may vary in regards to what they're looking at. If it's over 600, 500, take out that information. They'll give you like a pre-approved at a certain rate. It's a little different when you actually have put a self-employed income. From that point down, only they looking at what we got here. I wrote Bible. Come on, don't start that today. TikTok is so funny. I don't know. You got some colorful people that come in. What happens is when and every time somebody come in and say crazy stuff, it just throw me off. I apologize, everyone. But when you have self-employed income, you started side business, you got pressure washing business, you start doing, some styling hair and things like that on the side. So now you report it on your tax return. What's happening now, because if you went down that road to purchase a home, do a refinance, the actual lender will tell you to sign what's called a 4506T, and that's just authorization for an individual for them to pull your tax return. And what happens is when they pull your tax return, they're looking at their Schedule C. That's where you're reporting your self-employed income for your particular business, right? And that may vary if you have a S corp, LLC, or whatever. It's more multi-member. If they're looking at the 1120, 1065, whatever. But basically, they're looking at the actual bottom line number that whether it was a profit or loss on the tax return. Typically on your Schedule C, that'd be line 31, where they'll list if your company had a net profit or loss. Is the most important part about that, guys. If you're so stuck on writing off these business losses each year to get that refund, when you go before a lender to actually get that home loan, they're looking at it like, and again, here's the funny part about that. They're going off 24 months. And this may vary from state to state, but typically this kind of common practice. The lender will look at that line 31 on your Schedule C. They'll look at the line 31 and they'll take the average of a 2-year range. So whatever that dollar amount is from, just say 2022, 2021, total number divided by 24, they're looking at that's part of your monthly income, right? If you have a job in addition to it, they add that to it. If you have rental income or anything like that, they add that to it. But typically, they're taking the average income over a 24-month period. From that point, here's the deal. If you got a negative number and you go and say, listen, our business did pretty good. We made decent money, but whatever you're reporting to the IRS, that's their verification. Remember that. That's the verification that, excuse me, guys, that they're going to use. Get out of this. I'm doing. Sorry, guys. That's the verification that they're going to use. Again, so at the end of the day, keep in mind, that's one of the main reasons they pull your tax returns, because anybody can say they made a certain amount of money. They can sit there and show particular checks or bank statements. Excuse me, I'm sorry. But at the end of the day, they're going to verify what's been reported to the IRS, use that as a standard. You do have other products where they may not necessarily use where they may just say stated income, bank statement loans, or use financial statements for doing that. Those products are regular products, but let me say something to you guys. Just be honest with you. Just because it's available to you doesn't mean it's the best option. And what I mean by that is those products, usually, if you don't have any other options, those are probably your best options. Reason why, because the cost of carry is going to be so much more. And what I mean by the cost of carry, that interest rate is going to be, the terms is going to be more unfavorable. The better your stuff is together, the more cheaper it's going to be. And it'd be advantageous for you to go that route. I understand if you have challenges, things like that, and you have to get this loan at a particular time. I get it, okay? But typically, you want to make sure all your ducks in a row. And again, most of your lenders, they'll have kind of standard criteria, anywhere from maybe starting at 650 as a minimum credit score. Some, may have maybe 700, and typically the actual interest rate that they're offering you may fall in line with the actual where you fall in with those particular qualifications. But again, you do have other products outside of your traditional mortgage loan, like their bank loans, non-stated, just going off financial statements. You do have those, but again, guys, remember, when you're dealing with products like that, they're typically going to be a little bit more expensive. Sometimes a lot more damn expensive with that. So I would always kind of decide to go the traditional route because of that. Like I said, guys, a lot of times people will tell you different products out there, but they don't necessarily break it down the negative side of that. Okay, again, but and people may have different situations where they have coming to a deal or coming to certain things. So I get it, but for the most part, most people are going to be looking to get your traditional home loan, be it on that purchase or be it on the refinance. But again, what's not talked about a lot is because, again, you have so much information that are telling you to start your business up, write this off. I have a business. I'm going to make all these actual business losses, and that will give me an opportunity to not worry about reported or taxable income, or give me an opportunity to get this refund, and it blows up in your face when you want to go purchase a home. And guys, I'm going to sit here and tell you, we get, I am an accountant by profession. I own a tax business. We get people come to us all the time. They want to purchase this home, and they like, listen, we didn't know what we were doing. We want to go back because, again, remember what I said. They usually go on a 2-year average. So all kind of funky scenarios come about this now. Purchasers that listen, I want to purchase this home now, and I don't care what's going on. Can you cash at me $5, please? Little Aaron, me, boy, you don't call. Don't do that. Back to TikTok. Like I said, TikTok's something else. When you decide you want to purchase a home, but you wrote off those business losses, people come up with several scenarios. One being, hey, listen, well, I want to amend the return. So they're going to amend the return and just say that they said they had a $5,000 loss that particular year on that tax return. So now they want to show this income because now the lender is showing, listen, you need to show that you made an average of $2,000 a month. $2,000 a month, we know easy math is $24,000 a year. We're just doing an easy example. 2,000 a month, 12 months, 24,000 a year. Show the average there with 24-month period, 2 years. So with that said, if you turn around and say that you had to average that, you have to actually go back and amend those returns. You're going to have to show an income higher than you did before to actually add. It wouldn't even be 24,000. You probably have to say that you've made, maybe say 30,000. You know, I didn't give a number with the loss, but just say add that amount on top of that to bring that up current and then show that average. What's the bad part about that? If you got a refund already, you're going to have to pay that refund back, right? And also, because you did that amendment, you're going to pay that refund back and then then you have to pay the taxes on the now income that you say you made. Check this out. I've seen people incur all kind of tax bills and tax debt just to go through those particular scenarios to get the opportunity to purchase the home. But it's the funky part about that. You go amend your return, show this income, get this huge tax bill, turn it back into the lender, and then it goes to the underwriter, and the underwriter says, that's too much, we can't approve the loan. And I've seen this happen time after time after time after time again. That's one of the main reasons I want to have this conversation with you guys. You got to be very, very aware, especially when you going through the home loan mortgage process. A lot of times people are so quick, especially if you start dealing with the lender, and you got a lot of products out there now. What's that? Open Door, Red Door, a lot of places where you don't necessarily even need a damn agent anymore, and because you don't have anybody sitting there talking to you. And even hell, depends on the skill level of the agent, or if they have a broker that's going to a bank. If people are actually going to have a conversation with you to tell you, hey, you need to pump the brakes. Listen, you showed this. I know you want to get this home this year. You showed that big loss in 2021. You may need to wait to the end of this year and file your taxes in 24, report your 23, and show more income. Because again, you can easily get into a hole on the IRS trying to purchase a home and never get approved for the loan, because the tax debt that you just you decide to report is too high for them to approve you. It happens all the time, guys. It happens all the time. Guys, if you got any questions of if you lose me, if I'm losing you, rather, I apologize. In regards to that, feel free to chime in the chat. Like I said, if you got any questions, especially if you're self-employed, you got your business, you're looking, you've been writing off business losses, and maybe in the next year or two that you might be looking to get a home, and you're not really really too familiar with the process. Feel free to put in the comments in the chat right now. Feel free to put your comments in the chat, because a lot of times people say the same thing. What I hear all the time is that I got to work on my credit. I'll get my credit straight. Once I get my credit score up, then I go, apply for the loan. The issue is that people don't understand. You can have a 780 credit score, but if your debt to income is off, you're not getting approved for a damn thing. That's the problem. What I think a lot of people don't understand, when it's because so much raw information is pushed out to people in regards to home purchases and loan acquisitions. They don't understand that there are several factors that are coming to the whole process of being able to get approved for a mortgage. I say again, your credit score, again, when they're looking at getting approved for those loans, two things: the credit score and the income. Your credit score can be up there, but when you start looking at the proportion amount of money that you're paying in debt on a monthly basis, cannot, after your income that comes in, subtract that number that's left, can it justify you getting an X amount of dollar loan? And that's what a lot of people need to understand. You got to make sure that is fine. It's one thing to have a good credit score, but if your DTI, your debt to income is not sufficient, you're going to get your feelings hurt. And so you got to be very, very careful of that. So again, when we start talking about purchasing a home, especially again, if you have you're self-employed, people again are writing when they file the taxes off, they're reporting those losses, but they don't understand the bigger picture ramifications of doing that, right? Even if you decide that, hey, listen, I'm just reporting I broke even, keep in mind when you're doing those particular things, the actual impact that can have on you. Okay, you need to make sure you're thinking about those particular things, because again, I don't think enough conversations coming to the fold about those particular items. Let me see if I put that in now, guys. Again, feel free if you got any questions. Again, we're talking about make sure you do this first. If you're self-employed, you need to know this before you purchase a home. It's applicable to if you purchase a home, you're refinancing. You gotta understand the impact that those losses that you report, especially on your tax return. You have to know that, guys. And you can easily find yourself in a hole if you turn around and want to amend the returns. Now, how do you get around that? Now, you can't do damn fraud. You can't do fraud, because if you understated your income, you kind of did that already. But then if you turn around and say, well, listen, I co-mingled, I did this, I didn't show up my income, now I want to show my money so I can get an opportunity to get approved for this loan. Here's the thing with doing that, guys. I'm just gonna be honest with you. If you was wrong from the get-go with doing it, you want to kind of do right and fix it, I get it. But you better need to have a very, very, very solid conversation with your lender. Hey, listen, if we're going to go back and fix this stuff and get approved for this loan, listen, if we're going to do this, do you think this, once these numbers are plugged in, is it going to give us an opportunity to do that? I had a conversation with a client that's self-employed. Me again, I'm on one side. I'm the accountant. I'm doing your taxes. I'm telling him, listen, you need to have this conversation because you've already reported this income. Because again, people come to me a lot of times to fix stuff. Most of the time, you go to a person or you do it yourself. You don't understand them sides of it, so you go to a more technical person a lot of times when you want to get damage corrected. And I can just tell a person out of experience, listen, you need to have this conversation before you acquire this actual particular debt with the IRS. You need to have a conversation to have a good idea that you're going to get the opportunity to get this loan. And if that person can't tell you, you may want to rethink everything. And the reason being is because you do have a situation where the actual brokers and the underwriters and everybody have some kind of report where they can say, well, listen, these are the numbers that I need to see. If it's outside of that, when they report this income or correct everything, we're probably not going to be able to do it. So you need to make sure when you start going down that road to get this particular stuff done, you're already dealing with people that are savvy enough that can be able to answer the question you have, right? It doesn't benefit you. You can sit in the barber shop and talk to the guys, and this guy did and that guy did. That's cool. Our sister in the salon, y'all, going through, girl, you can do this, girl, you can do that. The issue comes up a lot of times, that information is correct for them. When you're dealing with people, that's all they do. When you're dealing with your attorneys, your accountants, your mortgage brokers, the insurance people, those underwriters, they deal with so many different ones. They understand that, okay, the difference of different situations. And so that is very, very important because so many times people look at their situation and where it may have went smooth, but that's really just isolated to them. It's not going to be the same situation for the next person because another person has different or a lot more factors coming into the fold with it. So that's something to be very, very mindful of. So again, I'm really, really stressing this to people that are self-employed, and you don't have to. When I say self-employed, you may have an anchor, a W-2 income that may be say $50,000. Okay, this is my regular 9-to-5 job. This is what I'm making. I got this pressure washing business on the side. We're selling cakes and pies and stuff on the side. So I'm reporting that income. I'm reporting a loss from that income, so I don't have to have this actual big tax debt. Get it? However you do it, you do it. Understand, like I said, the other side of it. When you start doing that, when you decide to go purchase that car, purchase that home and everything, do that stuff will come back and bite you in the butt because you're already understating your income. You go back, you want to fix it again. Now you're adding all this debt and you adding all this actual income, it can create a tax liability because again, the refund that you may have received has to be reimbursed, and then the tax liability on top of that got to be paid. So the situation with me, you got a $3,000 refund that has to be paid back, and you also got a $2,000 tax liability with your amended return, which totals up to $5,000 that you now owe the IRS. And I say this very seriously: if you are not sure, that you're going to get approved for that loan, you really need to, rethink everything. Jay, listen, let me just wait the next show. Let me wait till the next show, because remember what I said, guys. They're going off the average of a 2-year period. They're going off the average of a 2-year period. So you really need to make sure that you understand exactly what's going on. Okay, I can't stress that to you guys enough. They're going off the average of a 2-year period. And that was something I really want to, talk with you guys about there. Like I said, they got the other products out there where, maybe no docs and all this other kind of stuff. I get it. It may not necessarily require tax returns and stuff, but I'm telling you, the terms associated going to bite you in the butt. It's going to bite you in the butt. I'm always going to tell you, I'm open to listening to other options and other pathways to get across the finish line. But I'm always going to be asking, okay, what's the pros and cons of doing that, right? Because there's a lot of times we see a challenge or a situation there. We know it's different factors to get it done, but we have to be mindful of, okay, this right, if I do this, these are the pros and cons. Do this, these are the pros and cons. We can gather the information to break it down. But that's why I say a lot of times people get options presented to them because, hey, listen, you got to have your stuff together to do that. Sometimes it's best to just get your stuff together. So if it prolongs everything for another year or two, that's fine. We talk about it all the time. You see these videos. We'll tell people how to get all this credit and get all this other kind of stuff. But it's like nobody even think about it. You got to pay this shit back. It's not like you're just getting the credit, whatever. Is it worth putting yourself in an opportunity to get access to certain things and you're not going to be able to pay it back? And now you got, bad credit on your personal side. Now you got on the business side, all kind of stuff going wrong. So you got to be mindful of that, guys. You got to be mindful of that. So that's what I really, really want you guys to keep in mind with that, okay? And so definitely, again, if you're self-employed, you're looking to do that, you need to make sure that if if you're looking to purchase a home, get any kind of asset acquisitions, that they're going to look at the average of a 2-year period for your net income of that business. And that's going to add to or take from your average monthly income. Keep that in mind, guys. Keep that in mind. Keep that in mind. Before we get too quick and trigger happy with writing everything off on our tax returns, worry about the reducing taxable income and getting a refund. We need to keep that in mind. But one thing I did want to go over with you guys too is just that with that said, I'm going to share this particular screen. Let me see right quick where. Okay, right here. This is let me see how I got this popping up. Okay, this is a site that I use a lot. I've been using this probably for the past 20 years. This is DinkyTown.net. Let me put that in the chat. Oh, Lord. Okay, hold on. www.dinkytown.net. And I'm sorry if you're on TikTok. If you're on TikTok or you're on Instagram, you won't be able to see this. But on the YouTube, StreamYard, let me integrate in YouTube, Facebook, Twitter, and what am I forgetting? LinkedIn. But right now, I got on the screen, it's a page from DinkyTown.net. It's a mortgage calculator. This calculator has tax and insurance. So a lot of times, I was just talking to a guy who came by the office the other day, and he was just like, he heard that, somebody told him that he can get approved for $200,000 and he'll be able to pay this a month and do that. You guys know I'm a numbers nerd, and my background is in finance. You can find ways to plug and play. You don't have to be at the discretion of the actual lender to find out what certain things are. So what I want to show you guys, this is a pretty cool calculator. I use this all the time. So just say if you get pre-approved for $300,000, but you find a home for $275,000, and you want to put it on a 30-year mortgage. Got here. You know that the average rates are going, just say, well, they're 7% right now. And I always say, listen, if you go at the highest that it can go, you know, the highest that they're going for, you probably want to get there. You're probably going to get lower, but if you go to highest, you always get a worst case scenario, right? And I like planning on those particular terms. I got the worst case scenario in front of me, right? So let's say we have 7%, and they might be a 7.5 now, but just say 7%. They have an annual property taxes, let's say $2,500. Your insurance premium is going to be $1,500, and you see right there, boom. That's my monthly. That's the monthly payment, just principal and interest, and then that's the monthly payment, principal, interest, tax, and insurance. So you're looking at $2,162.91. Guys, you don't need to wait for somebody. You can go through this and just find out all kind of when you're looking at homes and stuff like that. Again, you can just what the market rate is now. It's straight plug and play. You don't know the property taxes. You can go to any county records. Any county records. Hey, DeAndrea, how you doing? Appreciate you tuning in. You can go to any county records and county property tax records. I apologize, and get the actual. That's public information. Well, just to find how much somebody paid in property tax for a particular year. You can look at comps. The comps will be those just comparables in a particular neighborhood to see what everybody's paying. But again, you can go to DinkyTown. It's plug and play. It's plug and play. You don't have to be at the discretion of somebody else to let you know, hey, this is what you're qualified for. We just went through that scenario. Let's do another one. Let's say you want a $300,000 home, 30-year mortgage, 7.5, property tax is $3,000. Insurance is going to be $1,800. Boom, you see that real quick. With principal, interest, taxes, and insurance, that's $2,395.91. You see how easy we did that, guys? That's simple, right? All this information right at your fingertips. Again, like I said, if you're on Facebook, TikTok and Instagram, you can't see this. But if you go to Mr. Short Dollar on YouTube, again, Mr. Short Dollar on YouTube, which is the main hub, you'll see this calculator I'm doing right now. And I'll make sure I put the link to this in the description section of this video. So definitely, guys, when you get them opportunity, you can sit here and just find this information. It's free. Public information, plug and play. You see that you know what kind of house you can afford. So if you sit there and say, because that's what I was just telling the guy in my office, and he didn't really want to hear that because I'm telling him to do some shit that's going to take him. He got to spend 5 minutes of his life to do. But, a lot of times we all want every damn thing, but we want somebody else to do most of the damn legwork for us to give us the information. But you can just go there. Tell him, man, listen, he's telling you want to offer $300,000. He's telling you that the monthly payment that he's offering, it seems crazy to you. Plug and play. Put the numbers in. I'm giving you the actual site. Put the numbers in. Play with it. I always base it off the highest rate. Public information in regards to the property taxes. You bump it up a little bit because if you're looking at the property values increasing, you can do that. And you got your damn information. You're not worried about, hey, I think they were lying to me when they were coming back. You can see it right here. And the cool thing about this website, I'm just going to share this with you guys. The cool thing about this website, look at all these different county calculators. I've used this for over the years. Got a auto calculator, saving, personal finance. This is an awesome site. Again, it's DinkyTown.net. Great source for anybody looking at, especially have challenges in regards to the finance world, not necessarily knowing different items out there. But DinkyTown.net, all these different calculators. And even with that mortgage insurance, check this out, guys. It's pretty cool. Look at these different ones that you can use. 15 versus 30-year mortgage, blended rate mortgage, combination mortgage, FHA. That's one I just use with the principal, interest, tax and insurance, all kind of different ones. And even you look at the ones with the, let's say, insurance calculators. You see these different ones have savings, disability insurance, all kind of different things. Long-term care calculator, which is a very, very, very important. We start looking at in regards to how much money a person will going to be needing in retirement age, because a lot of folks, really getting caught off guard right now. They've hit 60 and they don't have enough money set up in their retirement and trying to figure out, oh Lord, what the hell am I going to do? Great place to find, information and calculators to give you an honest assessment on information on some of the items you want to need. So that's that site. Let me get back in here. Boom. Again, I put the link to DinkyTown in the description section of the video for for you guys. Matter of fact, I can put that in now. Let's see. Do that for you. You guys got any questions? Feel free to ask me why you got me in here. Yes, not. Let me see if we got. Let me double check through everything. Again, I just want a quick discussion with you guys. To make sure you know that particular information in regards to if you were self-employed looking to purchase a home, do a refinance. I think that was very, very crucial information that I think individuals need to know about that. If you want to go down that road, you're already in the road of entrepreneurship and you want to purchase a home, want to refinance a property, do something like that, you definitely need to understand the impact of that net income. Line 31, Schedule C, the average of that number over a 24-month period. That's what they're looking at. If you have wrote off a massive loss and you want to get approved for a loan, you would get your damn feelings hurt. If you want to go back, because a lot of time a broker and an agent will tell you, well, listen, you say, well, listen, my business didn't write a loss. I just didn't get it. Why you didn't do it? Nah, I want to hear it. If you go back to somebody and get an amended return, you want to add this income so you can get approved for this loan, your ass better know if you're going to get approved for that loan or not. Because I'm telling you, hey, what's up, Trading Cole? Appreciate you tuning in. But you really need to know if you're going to actually get approved for that loan or not. Have a conversation. If a person can't answer that question for you, and they may just genuinely can't answer it. But before you go down that road of getting yourself, in any kind of debt or anything that's not going to be advantageous for you, you need to, just be able to have that information in front of you for you to be able to make that decision. Okay. So listen, I want to have a quick discussion with you. Hope you enjoyed the information in regards, especially with the website, DinkyTown.net. Let me do one more share. All right. Boom. There we go. Back here. Guys, again, I am Deonte Burden, a.k.a. Mr. Short Dollar himself. Again, on the Mr. Short Dollar YouTube channel, we talk about personal finance. Look at that handsome guy right there. Personal finance, business, entrepreneurship, and investing. Like I said, we got over 700 videos on the YouTube channel. If you haven't listened, go there and at least subscribe. We had 26.2 thousand subscribers on the Mr. Short Dollar YouTube channel. My goal was to be knocking at 50 by the end of the year. Maybe we're going to have a peak or a surge and stuff. I hope so. But definitely, if you have not, go to Mr. Short Dollar on YouTube. Again, Mr. Short Dollar on YouTube. Subscribe to the channel. Take advantage of all the great information we do have already on the channel. So listen, I'm about to disappear. I got to go finish cooking dinner for my kids and everything. So also, guys, go to my other YouTube channel. Check it out. Change the Life, hosted by yours truly, Deonte Burden, where we talk about motivation, professional development, parenting, father. I'm a single black father, so I have a lot of experience with that with that walk of life, which is very, very rewarding, but it has its challenges as well. So definitely go to Change the Life, hosted by yours truly, Deonte Burden. And that's, let me see if I got a damn link for that. I'll put that in the chat. And there we go. Put that in the chat as well. I ain't have too many questions today. People popping in and out and stuff. But definitely, guys, I was glad to have that conversation with you guys today in regards to things you need to do first if you're self-employed and you purchase a home. Best of luck to you guys. Listen, if you have any questions that's kind of offline or whatever that you want to know in depth, feel free to reach out to us on the YouTube channel or whatever platform that you're looking at. I promise you, I will get back with you. I got a good reputation to reach back out to people when they reach out to me. So take care of yourself. Love you guys. Be safe, and I'll talk with you soon. Peace.